If the Fed maintains a hawkish stance, how much do you think the Fed will cut rate in this year?
Well, I think that the data is going to alleviate that hawkish stance a bit as the months roll on. The market has come down from 6 cuts expectation this year to 5 cuts, and that's largely due to concerted effort by the Fed to talk down markets and to imply that they're only going to do 2 or 3 cuts this year. I think it's somewhere in the middle. The earlier they start, Andy, like for instance, if they started in March or May, then I think the Fed's estimate of 2 or 3 cuts is closer to reality. The longer they wait, the more they have to do, because disinflation or deflation is a much harder problem to solve than inflation. Inflation is easy. You can just re-raise rates. Deflation is a spiral that can cost a lot of money. So the earlier they start with the first cut, the less they'll have to do. So I would say it's probably a little more than the Fed expects of 2 to 3 and a little less than the market expects. So my bet is, 3 to 4 cuts for the year should be enough if they start early.
Okay, so there will be around 3 to 4 times that the Fed will cut the interest rates. So if the Fed will start cut rate in the second terms, how do you perceive it will be impact on the financial market, especially emerging markets like Indonesia?
Yeah, well, I think that the stage is set very, very favorably. As you know, for the last year and a half or so, we've been very bullish on emerging markets, and that's proved to be accurate with the exception of China. I think prospectively, emerging markets will continue to perform very well, and that's largely due as the Fed begins to cut rates. We're going to see a continuation in the weakening dollar. And as the dollar weakens, historically, that's been very, very positive for emerging markets equities. I think the addition to support emerging markets equities and economy is this time around, China will start to participate economically, which will add an additional booster to the emerging markets economies and the global economy as they've come out of COVID over the last year and a half, and their economy starts to hit on all cylinders. We remain extremely constructive despite the positive move you've had in Indonesian markets. We remain continually constructive for the next 3+ years on emerging markets as the Fed starts to cut and as the dollar continues to weaken.
All right. How do you recommend investors positions their portfolios given this backdrop of higher for longer rates?
Well, what we have seen is that markets perform well in terms of getting a little allocation into emerging markets, number one, as the dollar weakens. And as far as the U.S., our markets have gotten a little bit overvalued. We've been up 14 out of the last 15 weeks. So I think where the relative value is not in the large cap stocks that have driven the rally of late, but actually in the small and mid cap stocks, which are trading at a much lower multiple. So while the general indices trade at about 20 times forward earnings, the small and mid caps trade between 14 to 16 times earnings. And I think that's where you're going to get your relative value, both in emerging markets as the dollar weakens and the Fed starts to ease, and in the U.S., small and mid caps, which are trading at a lower valuation than the general indices, or the aggregate, what we call the Magnificent Seven, the big tech stocks, the AI stocks, are trading a little bit rich, and I think they have to take a breather. So in the next 2 months, at some point after moving up, 14 out of 15 weeks, the markets will probably start to pause in general for a little bit, catch their breath. But when you look at election years since 1928 in the U.S., the average returns for the general indices are up 11.28%. So even if we do rest, I do think we're in for a pretty good year in equities in the U.S., and I think emerging markets may even prove to outperform the U.S. this year.
Okay, speaking of elections, how do investors anticipate the elections of sentiment for Indonesians and the others emerging markets like India?
Yeah, I think I would never make economic investments on the basis of politics. It's always a loser's bet. And I'll give you an example.
Okay, we still can hear your voice clearly, but thank you so much for your explanation. We hope all the markets will be solid in the midst of any obligation and also the others sentiments amidst of these days. Thank you so much, Hayes, from your time. Good evening. Thank you for joining us.